Assalamualaikum warahmatullah and good day everyone. Welcome to the first topic of keeping it balanced, short course. In this video, I will be introducing you to accounting in business and its reporting. Specifically, I will touch on role of accounting in business, forms of business entities, and types of business activities before introducing you to areas in accounting, of which this short course will be focusing on only one of the areas, as well as reports in accounting. Let us start with accounting in business or accounting and business. Before we talk about roles of accounting, we need to first understand what accounting is. Basically, it is an information system that provides reports to users about the economic activities and conditions of a business. It really is a system because if you look at the definitions of a system, it is defined as a set of principles or procedures according to which something is done, an organized scheme or method. And in accounting, we do need to follow certain procedures and steps, and to do the procedures, we simply need to apply certain principles. This is what we call as accounting cycle. We start with identifying transactions to be recorded, record them through journal and ledger, and at the end of the financial year, we produce reports. The reports that this information system provides is the financial statements at the end of the cycle, and we start again in the new financial year. By looking at the accounting cycle, accounting can also be identified as the process of identifying, measuring, recording, and communicating economic information to permit informed judgment and decisions by users of the information. From previous definition, we can say that the roles of accounting involves identifying, recording, which include measuring, and finally communicating the economic information or activities of the business to interested parties. Now, what do we mean by identifying? In short, it simply means selecting transactions and events. Why do we need to select? Because we only need to record those transactions that are relevant to the business. Let me illustrate that to you. Let's say our friend Izhar starts a business and registers it as Easy Enterprise. So now we know that Izhar is the owner of Easy Enterprise. Let's say Izhar receives a gift from his aunt Melissa, a total amount of 50,000 ringgit cash. Do we record this transaction in Easy Enterprise? Is the transaction relevant to Easy Enterprise? The answer is no. Why? Because that transaction is not between Easy Enterprise and Aunt Melissa, but rather a personal transaction between Izhar and his aunt. Therefore, it is not relevant to the business. We identify the transaction as irrelevant to the business, thus no recording required. Now, what if Izhar kept 10,000 in his personal account and deposited the balance in Easy Enterprise's bank account as his investment in his own business? Would the transactions of that 40,000 be relevant? The answer is yes. Now that 40,000 ringgit is going into Easy Enterprise's bank account, the transaction is relevant to Easy Enterprise. And in the book of Easy Enterprise, there will be a recording of this transaction that we call a journal entry, where we debit bank account 40,000 ringgit and credit capital accounts of owner of the same amount. Now, this is the language that we use in accounting records, but we will not be discussing it here, not yet. Note that I mentioned the book of Easy Enterprise. Now, the system of recording the transactions in the book of accounts is what known as bookkeeping, which refers to record keeping in books of accounts. We will talk about this term again later in the course. Let us try another transaction. What if Aunt Melissa bought goods sold by Easy Enterprise for 10 ringgit? Is this transaction relevant to Easy Enterprise? The answer is yes. It is relevant since the goods were sold by the business to Aunt Melissa. The record will then be debit bank account 10 ringgit and credit sales account with the same amount. As you can see, what need to be recorded are transactions that are relevant to the business. Thus, the first rule of accounting before recording is to identify transactions that are relevant to the business. Although Izhar is the owner of Easy Enterprise, there should be a separation between personal transactions and business transactions. I hope you get the idea. As I mentioned earlier, After identifying the relevant economic transactions to the business, we need and we must record them. Recording business activities requires keeping a chronological log of transactions and events, thus taking note of dates is very important in accounting. And those activities must be measured in a certain currency to show value. In our country, Malaysia, for example, we use ringgit and sen. In China, we use Chinese yuan. In Bangladesh, we use taka. And in Indonesia, we use rupiah. Those records must also be classified and summarized in a useful format. The classification will be discussed when we talk about elements of financial statements, which will also be part of the format used for the report produced. And finally, those economic transactions of the business, after recording them, we need to communicate those transactions or business activities to interested parties or users of those recorded information. We need to prepare those recorded information in financial reports. The interested parties will then analyze and interpret the information as they see fit for their own economic decision. For example, if the interested parties are business owners like Izhar, they would analyze the information and decide if the business is doing well and decide would they keep the business or should they stop the business and withdraw their investments. Or for lenders like commercial banks, they would analyze the information to decide if Easy Enterprise, for example, would be able to pay the money they lend, and thus it is safe for them to lend more money to Easy Enterprise in the future. Before we go into the elements of financial statements, I would like you to know two things in general: the forms of business entities and the types of business activities. Let us first look at forms of business entities. Generally, we have three forms of business entities: the sole trader or sole proprietorship, the partnership, and a corporation or a company. The main things that we need to know about these three general entities are: where does this capital coming from and who manages them? For a sole trader, just like the title suggests, is a one-person entity. Capital comes from his own pocket. He may borrow from family members and friends, but he will be the sole provider of the capital. He is the owner and the manager of his own business. That means he owns all the profit from the business, and he also bears all the losses in the business himself alone. For partnership, like the title suggests, is two or more people who come together as partners in a firm. Therefore, the capital comes from both of them. From here, you can already see the benefit. More people to contribute capital for the business, and the risk of the business is shared by the partners. But the not so good side of it is they need to also share the profit, as both of them are now the owners and the managers of the business. And finally, for corporation, this is where the manager of a business will be separated or different person from the owner, at least in theory. What corporation do basically, they will ask capital from the public, and in return will issue to the public their shares, a certificate to recognize them as having rights in the corporation. The managers will manage the business, the public will be the rightful owners and wait for their investment to bear fruits, as in dividends. The separation between manager and owner is what known as separate legal entity. It simply means that the owner has a limited liability, so if the business is bankrupt, the owner will only lose the capital they have contributed and liable to portions of capital that they have not contributed, if any. And since it is a separate legal entity, if the corporation got sued, it is the corporation that is being sued, not the owner. We treat a corporation like a person legally. For your information, there is another form of business entity, a hybrid between partnership and corporation, that is called limited liability partnership. For type of business activities, we have three general types: servicing, merchandising, and manufacturing. For servicing, they provide services, not goods, so it will be less costly. No cost of goods sold, no need warehouse to store the inventories or stocks. For merchandisers or traders, they buy finished goods and sell them to end users. This means they incur more costs, need to record inventories or stocks, and need to also record cost of goods sold. And finally, manufacturers. They manufacture own goods and sell them to traders or direct to end users. This means there will be even more costs. They need to record cost of goods manufactured, cost of goods sold, and also inventories or stocks. Not only that, They also have not one, but three types of inventories, which are raw materials, work in progress, and finished goods. Regardless of the forms of business entities and types of its activities, all businesses need to record their economic transactions. Thus, the way we record would be the same. Only thing, the transactions involved would be slightly different from one another.